Hello and welcome to Majlis and Markets, a podcast where we explore the trends shaping Islamic and global markets. I am your host, Hassan Jivraj. If you enjoy this episode, be sure to like, share, and subscribe. And don't forget to leave us a rating. You can also follow us on LinkedIn and Instagram at Majlis and Markets, or drop me a line at hassan@majlisandmarkets.com. Today I am excited to be joined by Alex Shihadi, a finance and crypto veteran with over 2 decades of experience. From market making in traditional finance to leading Binance in Dubai, Alex has been at the heart of the region's crypto evolution. Now, as the Middle East cements its status as a global crypto hub, he's focused on bridging the gap between traditional finance and DeFi, making digital assets more accessible, compliant, and user-friendly. Alex Shihadi, welcome to Majlis and Markets. Great to have you here.
Thank you for having me. It's been a while. We connected a while ago, but I'm happy to be here now.
Yeah, I heard you first on another podcast, which I thought was really interesting. And you were still at Binance, your former shop at the time. And I felt you couldn't give like your full views on things. And like the podcaster guy was trying to push you a little bit. And I felt you gave some good answers, but like at sometimes I felt like you were holding back a little bit. So hopefully you won't hold back in this conversation. But Alex, like you said, I reached out to you a couple of months ago, maybe even more than that, asking for an interview. And I'm really glad that now you can chat to me, and I'm really happy that you've come onto the platform. And I'm really interested to get your insights onto what it was like working at Binance and what your thoughts are on crypto and everything. But before we get into all of that, Alex, could you give our listeners your early life and your background story?
Yeah, for sure. And thank you again for having me. I grew up in Bedfordshire in a place called Leighton Buzzard. So it's sort of between Luton, Milton Keynes, and Aylesbury, so in the home counties. Went to a comprehensive school, graduated A-levels, went to university in London and studied physics. And I think that was sort of a key driver for what I've done post that as well. I'm not a wordsmith. I'm good with numbers. I'm good with figuring things out. And so physics was one of the things I was looking at: maths, physics, chemistry, and physics is sort of the root of understanding everything, as many physicists would say. And so that drove me to study that. And then interestingly enough, I did a master's in quantum computing, which is now quite a hot topic, and everyone's, especially for cryptocurrencies, and one of the main underlying parts of the cryptography is public-private key cryptography, which can be solved with a lot easier mechanisms with quantum computing. But so studied physics, but did my master's in London, and obviously London's financial capital, and also jobs in physics few and far between. Post graduation, my brother got a PhD in physics and then left because there's just unfortunately not enough money to fund people to educate themselves further or do research. So financial services called. I started off as an interest rate trader, short-term interest rates, STIR contracts, short-term interest rate futures, European, US, and Europe, all traded on futures exchanges in life and in the US. Traded a few other products during my course of my career as well, like a bit of gold, indices, some of the longer dated bonds as well, like Bund and T-notes. And I guess the first brush with crypto was, financial crisis happened. And at the time we were sitting in a trading office in Cape Town trading. And I was in my mid-20s or mid to late 20s, and no one knew what was going on. Banks were failing, and we would come in and sit on our hands, not trade. And that was this first sort of understanding that there's a lot of complexity, and perhaps there's a lot of room for improvement in the financial markets. Going back to being a physics grad, we used Reddit, and quite quickly after the birth of Bitcoin, like this was all over Reddit as well. So I was aware of it. Guess not as much of an anarchist as as the sort of early adopters, but I think around 2012, I bought some Bitcoin. We were talking about it in London with a few guys I played basketball with, oil trader and economist, and myself. We bought Bitcoin in the way that it happened in those days. We sent money to someone. They went and bought it physically in a place in the US. Didn't think too much of it. I guess that was the proof that it works. Held on to it for a while, and then jokingly, as I said to some friends recently, when you're a short-term interest rate trader, you're trading bips, and you think even a quarter of a percent is a big trade, and so I think maybe I 5x'd my trade, and I was like, that's good enough. I did, the part of being a trader is understanding when you want to get in and out. And so that was enough for me. And I sold most of my Bitcoin, didn't think much else of it until 2016. I exited a FX trading company, and crypto was starting to heat up again. And there are a lot of new tokens. There's Ethereum was starting to become popular, so smart contracts were around. So smart contracts are sort of the ability to programmatically move cryptocurrencies. So you can create conditions. To boil it down simply, I mean, you can write a smart contract to pool in some cryptocurrencies, and then external factor, maybe the day of the week, the temperature, the weather, whatever you want to program in. And then based off that external outcome, you can then distribute, move, or affect the cryptocurrencies. So, it's called like compute. So Ethereum, Solana, Avalanche, all these sorts of blockchains allow you to have smart contracts and compute. So it's a sort of the step of complexity that people are now looking at above Bitcoin, whereas Bitcoin at the moment is mainly just a transactional layer. So the analogous to gold. In UAE, I know you've touched on this before. They're quite innovative towards blockchain and crypto. Dubai had a blockchain strategy in 2016, and that also, or I think it's 2015, that also swayed me to realize that this is a new market and it's something to pay attention to. But in 2018, Abu Dhabi Global Market and Abu Dhabi released additional guidance to allow cryptocurrency exchanges to go live in their financial free zone. So I moved to Abu Dhabi and I set up a crypto exchange. The CEO of the regulatory body left during that time, joined Binance, and then afterwards he hired obviously people that he knew that were around him, and brought me into Binance. And so I joined Binance in 2022 to help set up the exchange in Dubai for VARA. So that's the Virtual Asset Regulatory Authority in Dubai. It was a new regulator that's specifically for cryptocurrencies, and got the license for the Dubai entity, and then decided that I should be spending more time learning and enjoying crypto than a little bit of bureaucracy. Like Binance is a big entity. It's the biggest crypto entity in the world. And I think I would learn more outside of Binance than inside. So that's why I left.
I see. That's really great profile you've got, Alex. You worked, as you said, you graduated before the global financial crisis in 2008, and then you worked in, like, say, more vanilla markets, and then you discovered Bitcoin. I mean, when you first did you read the white paper in 2009 by Satoshi, or did you hear it from like somebody else or from Reddit?
It was in Reddit, and I didn't read the white paper until much later. In Reddit, it became a thing. I mean, I don't know whether I actually remember the guy buying the pizzas, but around that sort of time, people were starting to sort of make transactions with Bitcoin, for things like cars and things like this. But they were sort of one-off one-off transactions between two people. Um, and so I just saw it, and I knew what it was, looked it up, and that's what sort of slowly got me through the rabbit down the rabbit hole. And I think fortunately enough, I've never not been in a situation that I've been desperate for a big change, right? This is the key driver for crypto blockchain. It's big change. It's not being happy with the status quo. Like this was the key driver for the original sort of cyberpunks and Bitcoin maximalists that are around. Is they are super unhappy with where it was, and they want to change it. Whereas I was fortunate enough to be relatively comfortable and not, and not need it, right? You look, I'm sure we'll touch on this. Currencies and countries with currencies that are just devaluing all the time, or have currency restrictions, or a number of different things that, as a private individual aren't great. And again, Bitcoin is and crypto generally is sort of a self-sovereign. You have the ability to hold and transact without third parties. So you're not held accountable to any third party for what you want to send or do with your money. And that's a very powerful thing for people to look for.
I mean, from your perspective, Alex, before we get on to Binance, do you see crypto, not just Bitcoin, but crypto in general, do you see it as a means of exchange or do you see it as an asset?
Oof, tough question. I see it as financial freedom. So it gives you that ability. So we're in a stage where we're very early in the market. So there is upside, right? So again, I guess most people in the podcast will be somewhat familiar, remember the sort of dot-com bubble, and just growth, right? Like I keep remembering hearing everyone, and I've since read the sort of Bezos books and Amazon, but I remember everyone moaning of Amazon not making money, and the margins were too small, and no one's going to buy stuff on the internet, and they were totally wrong. And that market's grown, and it's a similar thing for crypto. It's still very early. The technology is nowhere near where it needs to be, but the ability to give people that financial freedom, that sovereignty, as an expat, and I've lived in South Africa, I've lived in Argentina, I've lived in Cyprus. I'm a British national living in the UAE and Abu Dhabi and Dubai. The ability for me to port my wealth with no friction at all, it is resonates very well with me. I mean, bricks and mortar and property, obviously, they have that sort of touch point with tangibility and the real world, but the rest of my assets, like I carry around with me, or have the ability to access with no problem. So it's the financial freedom, I think, is the key driver. For sure, it's going to unlock more economic value, and asset prices are also going to go up. So my key driver is freedom, but I think both of those other two attributes are valid.
Very good. And then, Alex, you mentioned you joined Binance in 2022. Obviously, Binance is a very well-known name in the crypto industry, and indeed, I would say it's become very mainstream in the past, say, 4 or 5 years, even maybe longer than that. Could you give us an insight what it was like working there when you first joined?
Yeah, so I joined, and obviously I was part of like the new CEO Richard's guys that came in. So Binance started operating before there were any cryptocurrency regulations. So Binance looked globally and looked at regulators that were aligned with what we're trying to do at Binance, right? And so I think the key driver for regulations and for Binance was consumer protection and operating. That's, if you look at any of the mantra and whatever it says on Binance's marketing materials and website, is users first. And that makes sense, right? It's a B2C company mainly. And, to keep your users happy and you continue doing business. So when they moved, decided to put a substantive part of their business in the UAE. I'd set up a regulated exchange before in Abu Dhabi, and so it was about coming in to do the same in Dubai. And so, like anywhere, people have been operating in a certain manner, and sometimes it's the same as you would expect. Sometimes it's different. Um, The founders of Binance are technologists and not sort of financial services regulatory people. So, that my job was to come in and make sure that was aligned, right? And make sure, you know, both stakeholders, internal stakeholders and the regulators understood what we're doing. And I think you've covered this in other podcasts, and we talk about this a lot. The paradigm's changed. So crypto allows you to transact peer to peer. Now, most regulation, or not all regulation, is for entities, right? For businesses that want to be regulated, want to act as counterparties. Now, if you remove that and you create a protocol, a piece of software, an ability for people to transact, you can never regulate a person. Um, you can you could try and guide people to doing certain things, but you can't regulate people. And this is the crux of and the difficulty for crypto regulations. It's the old paradigm of regulating institutions as counterparties and intermediaries is now being disenfranchised. And so this is the fine line that regulators need to walk down, because if you want to regulate and if you want people to use exchanges like Binance, you need to find a sort of happy medium in the way of consumer protection, safety, but crypto. And so it's a learning experience for everyone. And the UAE has done a good job of attracting businesses, talking to crypto businesses, and using our existing knowledge of regulatory frameworks and moving forward.
What was like a typical day for you at Binance when you were working out? What was your position when you were there?
So, as the general manager of the Dubai exchange, and my two key stakeholders were mainly so internal businesses. So, like I guess like business functions for people that are, I guess, familiar with the exchange. So, like all sort of products are run as sort of uh, internal businesses. So like the spot trading, futures trading, some of the staking products, even things like onboarding, they all run. And so managing these stakeholders, making sure that we were operating as defined by the regulation, and then having enough internal oversight that we could do our sort of regulatory reporting. And then the other sort of major stakeholder was the regulator, right? So again, it's about open dialogue. It's making sure that they understand what we're doing, about reporting, where things are I guess the way they expect, and sometimes the things that are not what they expect, right? So because of as I said, the sort of paradigm of allowing peer-to-peer transactions, a lot of the rule set, a lot of the mindset that traditional regulators have just don't work. So you need to boil down to what do regulators want? They want to minimize risk, right? So whenever they ask something that just isn't feasible, doesn't work, or doesn't mitigate the risk that they're looking for, you have to have a dialogue and explain to them what a better way of doing things is, or how you can better address it, right? Because having worked with regulators for a fairly long time, they just want to mitigate the risk, right? Again, it's a client protection, user protection. The business is aligned, so nothing too tricky, but it's maybe different workflows, new language, uh, lots of education. That's why we like talking about crypto to everyone because it's all about education.
And the use of like say sports stars like Cristiano Ronaldo was a big part of that marketing drive, right?
Um, yeah, so the crypto market's still small. It makes a lot of noise, but the user adoption is relatively small. I think A16Z had a 2024 overview with mentioning 800 million wallets were used relatively freely, but only 80 million on a daily basis. Now, if you understand how easy it is to create a trading bot or create multiple wallets, like I for sure have at least 10 to 20 wallets. You sort of see the numbers are a lot lower than these headline figures, and bringing people into crypto and educating them through sports stars and any sort of mechanism for mass adoption is important, right? This is how you reach people these days, right? Like videos, podcasts, short snippets. It's about educating people and getting them to look and think about things. And so yeah, sports is a big thing, Yeah. Everyone looks at sports stars, race drivers, and whoever is in the public eye, and they're littered with logos, right, of people vying for attention.
And did you ever interact with CZ a lot? And was the business in Dubai different to say the US business arm?
Yeah, I interacted with CZ, not a great deal because I was running a local independent regulated entity. Um, but he was in the UAE a lot and we'd interact and he's a great guy. He was sharp, wants to and really bought into the sort of crypto ideals. And so he yeah, he's grown his business and stepped away. When I joined, the US business was always ring fenced, and a lot of the other jurisdictions were not, right. So we would talk with people in places like Taiwan, France, where the other entities were trying to do similar things to what we were doing, so sort of shared internal knowledge. But the Binance US, they think well, it was completely ring fenced, and then part of that was also that I think they took external investment, whereas the rest of the Binance was all owned by CZ.
Interesting. And then Alex, also at the same time when you joined in 2022, obviously there was the very famous scandal with FTX. Did you have you working at Binance? I don't know if you can share. Like, what was the feeling like at that time working at a competitor?
That was quite the roller coaster. I mean, I'll tell you a story. My wife woke me up that night and said, "Your phone's broken." And I said, "Why?" I mean, I've got young kids, so I go to bed early because we get up at the crack of dawn. And she's like, "It's been buzzing nonstop for 45 minutes." And so I got out of bed, like I think it was in a different room. And then obviously this was unfolding, and there's messages and hundreds of groups. Um, Post the fallout of that, obviously the market crashed as well, and it was probably the sort of saddest times that I've had in crypto. There's been sort of the bear markets before, but it did rock everybody. Then we sort of find out the extent of the problems at FTX. Um, for sure, there's nothing at all like that at Binance. But what it did is it just, I guess a lot of people were questioning whether this is the right thing, and have we have we sort of dedicated or made a mistake with our viewpoint or the technology? Yeah, like I remember quite a few people within Binance and outside of Binance I have long-term relationships with. We talk about crypto, and the market is down, the morale was down because it was such a failure of the whole industry. Um, and we're not lucky that we've got through this. I think it's just a learning exercise, and it the people talk about just build or go away and sort of ignore this sort of hype, and I think we've come out stronger for it.
And then what prompted you to leave Binance? Like, why did you decide to leave?
Um, I guess a couple of things. Firstly, I love to learn, um, and I think I have a better opportunity to experiment and play and do different things in crypto. So crypto is vast, and it started with Bitcoin, and then it's added additional protocols like compute, as I mentioned before, where you can start building smart contracts. And now we have things like decentralized physical infrastructure, DePIN. Um, I just think that there's so much to look at and get involved in that the crypto is still early, and I've done the exchange stuff, and I want to learn more. I want to see what's out there. I can contribute to people projects in a sort of symbiotic motion. I can share what I know and help, and then I can learn. So it's a sort of thirst to learn, and it was at the right point. We got the business license. I'd hired a good team. I had a good successor, and then I just had well, was just about to have my third daughter, and it was nice to. I sort of took paternity, hung out with my family. Didn't need to be on beck and call to a firm, and take my time and live my life.
Yeah, it's interesting that you mentioned earlier on about how when you graduated from university, you were working until the GFC in 2008, and then you probably saw this like big downturn in the market in crypto in 2022. What did you have any like reminiscence of the old days when that was happening?
Um, the difference, I guess, the difference was the financial crisis. Um, the financial crisis of 2008, 2009 was a, although we sort of know why, it was a lack of understanding of risk and leverage. Not again, not in isolation, but just like the whole market sort of, and how much contagion and what the dependencies, etc. With the FTX disaster, we knew what the problem was. We knew how it happened. We knew it was a lack of transparency, and blockchain should solve this, right? So you can see transactions, you can see wallets. You shouldn't have this problem, right? We can create products on the blockchain where you can pool assets. So unlike sort of the traditional markets where you have like CDSs where some of these underliers are very opaque, or you have to rely on a third party. You can create lending and borrowing pools where you can investigate and look. So the difference was, I think, poor execution of people in our industry that we thought were good at their jobs, or were leading the industry. and I think it was more more shame than than bigger problems and whether we would get through it. So the one of the other great things about crypto is the ability to not need to trust third parties to do transactions. And so this I guess was one of the failings. So there was a difference. I mean, obviously, it's funny. I think most people that do work in financial services sadly will understand that price action. I think, or even a listed company, right? The price action of the company you work in or the industry you work in does affect morale. And I think CZ said this, but for sure I echo this. When the crypto prices are going up, everyone's much happier in the business, and then when they're heading south, people are just not as happy. And for sure that happens when you're working at any big publicly listed company. Let's say how many ever millionaires work at Nvidia these days?
And post Binance, what are you up to these days, Alex?
Um, I am helping a couple of projects. One's called Atlas, and this is quite interesting. We can maybe touch on that a little bit. So they're tokenizing an ETF, which is backed on real world assets, which are sustainable and inflation protected. So, a basket of treasuries, gold, agriculture, and then real estate in places that are climate protected. And this works for two things. It allows you to use this as a collateral token. It's a better collateral than just treasuries, where you have obviously inflation on US dollar. So you're inflation protected. But what we want to do with this is help use this as a vector for FDI, so foreign direct investment in the global south. So allowing sort of sovereigns in the Middle East or other institutions that invest in these places, if they use this as the vector for FDI, your inflation risk is negated, and so you actually get better returns. And then using this with crypto and allowing you to either you can issue currency against it with a lending pool, or just transact is super exciting. I'm helping a couple of other projects that are coming to the Middle East as one of your other guests. There's a myriad of different regulations, jurisdictions within just the UAE itself. And so having worked across these, I'm helping them sort of navigate that. And I'm also working with a layer one called Avalanche. And so they're one of the top layer ones. So this is at the protocol level, and it's allowing me to sort of learn again. So the trading, exchange, those interactions, wallets, I understand, and I have a great, decent understanding of that. But it's the rest of the crypto infrastructure that I'd love to sort of learn more about. So we're early, and I just want to keep learning and not shy away, right? If you think of the sort of computer adoption over sort of 70s, 80s, 90s, and then the internet adoption from 90s to 2000s, crypto is there. And so I want to be abreast of all of it.
Amazing, amazing. That sounds fantastic. Alex, I want to talk to you also today about a couple of topics, but the first one is about your views on cryptocurrency in the region, specifically Middle East, North Africa. You've touched about regulations and how different authorities are doing different things. Like if we look at the GCC right now, obviously the UAE is probably leading the way in crypto adoption and crypto regulations. Why do you think they're leading this, and why do you think they're really interested in developing themselves as a hub for cryptocurrency?
So firstly, it comes from the top down, right? So, the senior leadership of the country and as again you've talked about, even at an emirate level, the sheikhs of the Emirates are aware of crypto, and they can see it's the future, and it allows them to distinguish themselves. So you have a top-down message of, let's move forward. Additionally, it's it's a new industry, somewhat intertwined with financial services, and within the UAE, it's a new market, and I guess even the sort of expansive nature of the economy here, they have a lot of room for growth, and so. And this is what attracted me to the Middle East and to the UAE is where you're at a place of growth. Um, it's it's better, you're building things, and the expansive nature of the economy makes life easier. Where you're working in a traditional ecosystem, very well trodden places. I mean, obviously, sort of like in the West, in Europe and US, Singapore. These financial ecosystems are extremely mature, and they have a lot of existing businesses. And as we've talked, this technology unseats some or a lot of this. And so, do you introduce a new industry that cannibalizes your existing one? I think that's a very tough decision to make. Whereas the UAE doesn't have this giant financial services industry, or didn't. They're sort of growing that, and so they have that opportunity. So they've taken it. So they've created a place for people to come and build their businesses and innovate. And that's a lot of the UAE's move away from fossil fuels, right? They're looking at new industries. Dubai has always looked at being a connector, right? Like a port, then moved into tourism, and now Abu Dhabi the same. They're looking to create financial services hubs, and I think crypto fast tracks them on that. And we talked also about like RAC as well, of created a digital asset free zone there. So it's that opportunity that the leadership here have seen, and are looking to capitalize on.
But what about the adoption, Alex? Do you think like a lot of people in places like Dubai and Abu Dhabi and Iraq and other Emirates, do you think they use cryptocurrency in their everyday life?
Um, Not so much every day, but as I touched on, there's a there's a lot of expatriates in the UAE. I haven't looked at numbers in a long time, but I guess maybe it's 80% expatriate. And going back to the freedom that crypto gives you, and the ability for you to remit at very little cost, if not, sometimes zero cost. Um, that that is a great selling point, and this drives adoption, right? Adoption is driven by utility, and so if you can use crypto and it benefits you, you're much more likely to use it. And so having a big expatriate population is definitely a big driver. Um, probably coming to the UAE, and is a different kind of person than someone who is just working in their home country. So maybe they're a bit more experimental as well. I haven't looked at sort of the psychology of that, but the just by being here as an expatriate, crypto benefits you. So why not use it? I think that's the main driver, and then having a sort of public dialogue with regulators and senior leadership also validates it, right? So, there's not such a negative viewpoint on crypto in this region, so it's easier to adopt. Where you have, again, other jurisdictions where there's a big negative connotations on using crypto, for sure, people that are on the fence or not particularly interested are not going to bother with it. But here, there's a much more positive bias, and that builds adoption again.
How does the UAE stack up against some of its Gulf neighbors? Do you think their other countries are doing as much as them, or do you think there's still like some work? So, like if we look at somewhere like Bahrain, which I remember back in 2017 was talking about crypto, and then we had the lawyer on a previous episode ago about
Yeah.
Qatar. What are your thoughts on the other Gulf countries?
Um, the the UAE is leading. And the UAE is leading because it has more human capital on this problem. And this is something that they've earned and built over the last 5 years now. You, if you want to start and do this, and whether you're in the GCC or not, you need to find the right people to run the regulators, and there's a very small number of people that can do that. And then you have to track the business. And again, but the UAE has done a great job of attracting crypto businesses to the UAE for the infrastructure, connectivity, quality of life. And at the moment, that's helping them lead that charge. Qatar are doing a lot with a particular use case of crypto, the real world asset tokenization. So like, it's in old finance terms, sort of like securitization of tokens of real world assets. And Bahrain, they move quickly to start with. They have one single regulator, which makes life easier. So if you're regulated, whether you're a bank, a crypto exchange, crypto broker, it's all the same regulator. So within the ecosystem, I think they move faster to start with, but it's just a smaller market. And Saudi, they're concentrating on other things, it seems. Obviously, the mega project NEOM is quite a substantive thing to deal with. So maybe they don't want to add the complexity of crypto at the moment.
One thing I wanted to talk to you before we get on to Bitcoin and your thoughts on the market, Alex, is what about other technologies? Do you see potential? Like I mean, back in a couple of years ago, you used to hear a lot about Web 3.0, DeFi. You've mentioned about tokenization. Is there opportunity for other technologies within the crypto ecosystem?
So yeah, the where we are, the crypto is still difficult, and we need to reduce the sophistication required to access crypto. And what we're slowly getting there with the ability to sort of create wallets. It was what we called account abstraction, where you can create wallets to interact in Web3 with sort of Web2 interfaces, so just authenticating in a different manner. So that's a big step. But things like any sort of transactional based thing that you do. So think of like loyalty points. Moving this to crypto would be. I think everyone wants to look at a mechanism for that. It's good for the companies offering loyalty. Uh, It's good for consumers. It really creates a lot of freedom. So the problem is all the nuts and bolts are exposed for crypto. It's still a little bit difficult. What I want to see within this year, hopefully this year, maybe the next year, but this year, is a sort of an app that goes mainstream that's built on crypto, but you don't need to care it's on crypto. And I think that's that, like you don't care where your website is hosted and which cloud server, or you don't look into who does the cabling from your router to the optic fibers. You don't need to know this. You just need to use the app, and we haven't really got there yet in crypto, and that's where we need to get to.
What about things like I remember back a few years ago, you probably as well, NFTs. Remember this non-fungible tokens? There was a big hype and a big splurge in this. Do you think this could just like lead to other technologies being overinflated, both on price and in terms of its like influence in the ecosystem?
Yeah, I mean, and again, NFTs were an experiment, right? They're like, what can we do? So it was like a token standard. So it was obviously non-fungible, unlike a sort of fungible token, like an oil contract or Bitcoin. Um, and we're becoming more, well, we're not becoming more, we're visual creatures, right? So people look at logos, they have brands, they have, art. So why not have this on chain? Why not be able to trade this on chain? I don't think the proper use cases came out for NFTs. But yeah, there's just a lot of excitement. And one of the things that crypto does look at is scarcity, right? And so the unique nature of certain products. And so if you've got your whatever we think 80 million, 800 million, however many people all chasing the same things, you're going to get these sort of price spikes. But that's not uncommon with anything that people collect, right? I mean, I'm sure you remember Beanie Baby craze and people buying, teddy bears for crazy money. It's a teddy bear, right? You can create as many as you want, but people get like attached to scarcity or uniqueness. Whether people are buying trainers or sneakers, right? Limited edition, everyone goes crazy for. So don't get phased by sort of price action on this. I think we're yet to see non-fungible tokens become important, right? So, people used to collect football match programs, right? Well, how is that different to NFTs? You can issue NFTs to people's wallets. There can be a collector's edition, it could be memorabilia, it could be a ticket. But then you can start looking and say, right, well, you've got all these tickets, these NFT tickets, and as like a content producer, you say, oh, well, if you've been to six of my contracts, six of my concerts, and all your NFTs are in one wallet, like I'll give you a freebie or a discount to the next concert. So yeah, the hype and people rushing for scarcity, you get these price spikes, but it doesn't mean that the technology can't be used in a more constructive way.
Alex, before we get onto Bitcoin, there was one thing that came to my mind. When I talked to the lawyer in the previous episode about central bank digital currencies. What are your views on the CBDCs? Do you have like a positive or a negative view on them?
I don't see the need for them. I mean, if I had to say a positive or negative, I'd definitely say negative. The what I say, one of the beauties of Bitcoin, what everyone loves, is it's not controlled by a single entity, right? So it gives you that freedom, and where you do have control from a single entity or a single group of people, there's an ability for that to get hijacked or control. And so that's part of the issue for central bank digital currencies. I can't remember off the top of my head what Trump said about CBDCs recently, but um, I don't think it's necessary, and we have the ability, and we have the products already to not need these, right? Within jurisdictions, ecosystems where digital payments are much more fluid. You can see things working. I think it's but in Nigeria and in Pakistan, and I know both of these guys have tried and looked at using CBDCs, but they've rolled out very cheap, easy mechanisms to pay through apps, and they're happy with that. So I, I I think it's just something that's been dreamt up but not properly thought through, to be honest.
Yeah, I was going to say one of the things I mentioned again to the lawyer, to the crypto lawyer, was that it could be used as a way of implementing government policy change. So, like I gave the example of like, say, if you're consuming too much sugar or too much meat in one day, that the CBDCs would be used to like limit your purchase of a certain commodity or product in order
Yeah.
for public health policy. Do you think that's a way of like more form of control for the governments?
Oh, yeah, I mean, that's quite a vanilla mechanism, right? I mean, they could decide that, like food and health prevention, I guess, is quite uh, a nice thing for them to come over the top and provoke oversight. But I think that, that's a slippery slope, right? Um, was it Canadian truck drivers or French truck drivers that started having all their accounts frozen for protesting, in Canada, which, a lot of people got quite upset by that, right? You should, especially in a place like Canada, where they think that you should be able to protest. So, yeah, this is the problem that we can see quite evidently, and need to steer away from.
As we come towards the end of the podcast shortly in a while, I want to talk to you today also about Bitcoin. Obviously, you working at Binance and being in this space for the past decade or even more. One thing I did talk to you about on when I messaged you was we talked about Syria, um, and since they had the change of government there, its economy has been in a lot of shambles, I would say, since even before the Arab uprisings in 2011. The currency's completely been decimated, the economy's been decimated, and with the new administration there, there's been talk of them adopting Bitcoin as legal tender or as currency. Now, as they try to rebuild the economy there, what role do you think Bitcoin could play, or do you think it could play a role in Syria's reconstruction?
Um, it would be nice. It would be nice to rebuild the problems that we've got there in the Middle East and in Syria. The This all stems from, I guess, the problem of fiat currency, right? So the fiat currency is a government issued currency that's not backed by anything, and if the government has no ability to defend its the sort of perceived price or the value of that backing, then it's going to go into free fall. And we've seen this in Syria, we've seen this in places like Zimbabwe. And so what do you do then? So then you need to issue something or use something that people do understand the value of. And so I guess Syria have seen El Salvador, and you can use this product to just bypass their fiat currency. You see it in other countries as well, where the people effectively ignore their local currency because there's no value in holding it, right? The same for Lebanon, where my family come from. There's two sets of prices everywhere, and just for dollars. So there's Syria, I guess, have think it's easier or a better choice to use Bitcoin as that currency, because it's when your currency is dying like this, I guess you're moving back to sort of a barter economy, and Bitcoin as a transactional asset there is a great one.
But how would it work in practice, Alex? Like you need electricity, sort of reliable electricity. You need like people to understand it. How would that work in practice? Because I mean, like if you look at a country like El Salvador, for example, they tried to do that, but then obviously the IMF, which recently gave them a bailout, told them to scale down their ambitions with crypto adoption. How
It,
would that
it,
work in practice?
it's I mean, I don't think it's a technical problem. It's it's a relationship problem externally from the country, right? Obviously, as you mentioned, for you need power to transact, which it is problems in war-torn places, but generally people do have phones. In places, in Africa, people who have smartphones before have bank accounts, right? And so the people transact in that manner. They buy airtime and transact airtime. So, similar mechanisms. It's not a technical problem. It's sort of infrastructure and, the 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 external relationships that the country has, whether they're borrowing money from an external agency or trying to transact or use whatever currency or Bitcoin with external persons. I think everyone's if you think you know kids these days are very comfortable with technology and mobile phones. It's not you're not teaching these children how to use technology. It's second nature to them. So having the infrastructure, making digital payments, I don't think is the problem. It's externals.
But then, Alex, how would you explain that to somebody who doesn't really understand crypto and would say, "Oh, I'd rather put my money in something like gold, where where it's tangible, it's got a good store of value, it's good hedge against inflation." How would you advocate for Bitcoin or cryptocurrency?
Um, Well, firstly, I mean, most people don't understand what money is to start with. So, so, so it's a little bit unfair. I mean, obviously, gold is easier to understand. It's tangible. They're aware of it. They can attribute value. Um, but currency is a very complex thing that, even I am not an expert in fiat currencies. I learned economics and did all of my sort of financial services learning on the job after university. But again, the how you convince people to use it is you show them utility. We talked about this earlier on the call. The utility of holding the tokens in a wallet that you can put in your phone, put in your computer. Um, your phone can be destroyed, and you can then recreate that wallet somewhere else using, a seed phrase, so just words. So, you still have that fault tolerance. And you have the ability to transact peer-to-peer and cross-border, which, again, lots of people in Syria will understand that value, right? I know people, I know a lot of Syrians that have had trouble prior to all of these problems sending money home because of the sanctions and you know the people controlling banking rails having a ring fence around Syria. And so, allowing people to send money across border instantly, it is better than gold, right? You can't post gold across to people. So I think the crypto utility is apparent. Yeah, as I said, there is complexity, it is new, but I don't think people between the ages of 10 and 18 I would be too phased by it.
Do you think the answer then, part of the answer is also like, I know that BRICS and Russia in particular have been advocating for another payment system away from SWIFT. Do you think that could be a gateway to more crypto payments?
Yeah, it's you need redundancy, and having one single entity controlling all this is a risk. So, if you're that, it goes back to CBDCs. If you're the one controlling everything, it's fine. But if you're not, you need to say, well, what happens if? And that question was definitely asked when the war in Russia and Ukraine happened, and SWIFT turned off payments, and everyone's like, well, let's let's not get to a situation where this could happen to us for whatever reason, right? No one's none of the BRICS are aggressors or doing anything like that, but who knows what happens with that one entity or a single controlling point, whether it fails through a human decision or externally, right? If for some reason it goes down or breaks or corrupted, surely you want a secondary mechanism for this.
During the American presidential campaign last year, late last year, Donald Trump, even before that, he was talking a lot about crypto, and he wanted to make the US the crypto capital of the world. And the US has been buying up a lot of Bitcoin. Um, from your perspective, why is Donald Trump doing this?
Um, it's def it's definitely something good to talk about. And I think within his circles, crypto is talked about. The Republicans are sort of small government, and this allows you to function with sort of less governance. And so if the Republicans and people around him are on board and happier to talk about crypto, it's been a good talking point for him. It fits with the narrative of what he wants. He wants sort of a America first, repatriating jobs and businesses and economic value. So it just seems to make sense. Obviously, it's great for our industry that he's affecting the industry positively in a number of different ways. Making it a conversation. Changing the regulatory standing and stopping some of the US government agencies having such a hard line on crypto is definitely net positive. And I think he sees the benefit for everyone there.
I mean, just before we jumped on this call, there was news that the SEC has developed its department, I think, of crypto. So it seems to be becoming a reality where the government is actually implementing a lot of these changes.
Yeah, I was reading that they've moved a lot of lawyers away from persecuting crypto businesses to other things at the moment. So it's it's very positive for the business. Like globally, the business US is a big economic player, right? Whether you you want to spend much time concentrating on looking at the US, it's still a major player for economics and value and investment. And so to have a positive bias of crypto come from the USA, it's very good for the industry.
When you look at the prices, Alex, they've been rallying a lot. A bit the Bitcoin prices I'm spoken about specifically. If you look at Bitcoin prices since the middle of last year, they've been rallying a lot, and it's been a number, or even before the beginning of the year, it's been rallying. You can talk about the BlackRock ETF, you can talk about halving, you can talk about retail investment. I guess my question to you is, where do you see prices going? And also, in tandem with that, do you see them very correlated with like other asset classes?
I see prices going up, and I think that it's there's not there's not much correlation. I've been on panels in the last 6 months talking about whether it's a risk asset or risk on, risk off. There's big debates still about that, right? So in times of duress, remember we used to get like, or you still get like flight to quality, right? So a flight to sort of tier one investments, US dollars, US dollar bonds. This is still a mechanism that financial institutions look at, but I think for people, I think they can make a different choice, and they are. So with that in mind, or if you look at it as an investor or someone that wants to protect their capital or look long term, I mean, it seems obvious that prices are going up, um, whether you care for that or not. I mean, definitely sort of the tier one assets, Bitcoin, like Ethereum, Avalanche, where there's economic activity, there's utility, there's transactions. It going back to the internet, everyone points at these core internet businesses. No one. I mean, you could choose to be long things like Amazon, Nvidia, but there's definitely a positive bias to these prices. Same with crypto, and crypto's again earlier. So I think I was reading, especially places where there are expensive university fees that parents are putting away Bitcoin and crypto to pay their kids' university because despite the daily volatility and the weekly volatility, intraday volatility, on the long term, if you're looking at sort of 10-year time horizon, it seems a much better mechanism as a store of value with the sort of scarcity and the understanded output of crypto. I mean, within the last 5 years, right? We didn't. I mean, I wasn't trading when the pound sterling left the ERM, but with the interest rates going around like that and inflation, now we see, an erosion of wealth just sitting in currencies. And so what do you do? You can invest in things that you think are sort of somewhat inflation protected, and crypto, I think, is one of those things.
Fair enough. Alex, tell us any projects you may be working on. I mean, you've told us some, but tell us any projects you may be working on, any upcoming projects you may be working on.
Well, so say for like Avalanche is a layer one that I'm helping these guys. They're very institutional focused, and I want them to sort of expand in the Middle East, expand use cases. So using things like DePIN, so decentralized physical infrastructure. So this was something we talked about in 2016 when we understood tokenization. How can you create uh, economies and mechanisms where you can have sort of peer-to-peer environments, right? So and we see this, but with counterparties, right? Intermediaries, right? Like Uber is a good example, or we in the Middle East we have Kareem, where you have a driver, you have a consumer, and then you have the product. Now, with crypto, with wallets, with smart contracts, you can start to have that without a firm, right? And so reducing the business in the middle gives a better experience for the consumer. It should allow the participant, the person providing that service, to get remunerated more effectively as well. So the decentralized physical infrastructure, DePIN, and then I said the Atlas project as well. It's about really freeing up capital, driving investment in the global south, investing in sustainable developments in the global north, the climate resilient, and freeing up capital and making the world more equitable. So I think crypto can do that, and that's what I'm looking forward to doing in the future.
Great. And Alex, what's the best way for people to get in touch with you? And are you active on social media?
Uh, I'm told I should be more active on social media. I need to do some more LinkedIn posts where I'm relatively active, or on Twitter. I think it's Alex Crypto 42.
Okay, great. I'll link it in the show notes. But Alex Shahadi, this has been a really great conversation, and I wish you all the best on all your new projects and going for the rest of 2025.
Thank you, Hassan, and I hope to speak to you soon.
If you made it this far, you must have enjoyed that episode. If you did enjoy that episode, don't forget to like, share, and subscribe. It really helps us bring you more great insights. Follow us on LinkedIn and Instagram for the latest updates. Got feedback or guest suggestion? Email me at hassan@majlisandmarkets.com.